Hey, today we have the opportunity to talk about mortgage hacks on the 7th day before Christmas. Excited to share a few tips with you today. You know, I hear daily people asking this question if they can afford a home. And honestly, I don't care the market, I always hear this question. And honestly, it's a really good question. But have you ever heard of the saying that absence of knowledge and understanding is ignorance? You know, here's my goal. As a real estate agent, I don't want you or any of my clients to ever be ignorant about your options, because there are so many mortgage hacks, I call them, that you can use to maybe even get a deal for your home. You just have to know about them, right? And even better, you have to have an agent who knows as well and who can consult you through this. So, how do you get a better deal on a mortgage in a market that today has interest rates that are a bit higher than you are used to? Let's talk about 4 mortgage hacks you need to have in your tool belt and back pocket. Understand these terms. Number 1 is called a buy down. Now, this is when you buy down the interest rate. Now, there are a couple different ways to do this. 1, there's the traditional buy down, and then 2, there's the either called the 3-2-1 or the 2-1 buy down. Now, a traditional buy down, you simply purchase points to lower your interest rate. That's it. Now, 1 point, if you've heard of this, 1 point typically equals to around 0.25% of interest. So here are some numbers. The cost of buying 1 point is roughly 1% of the loan that you get. So if you secure a 7% interest rate on, let's say, a $500,000 loan, you can buy 1 point, which costs you $5,000, and get 6.75% interest rate. Now, here's what's cool. That will save you about $80 a month, and honestly, about $30,000 over the life of a 30-year loan. So that's awesome, right? It's good. So definitely feel the freedom to utilize buy downs. But here's what you need to be careful of. If you were to purchase buying down the interest rate for 30 years, and the moment the interest rate's lower than what you secured, you very well may finance. The moment you finance, to be honest, like that money you spent to buy down that rate is kind of gone. So be careful to really leverage and use the monies that you have wisely. To be honest, I'm not buying down rates right now because I'm planning to actually refinance, though it's always an option. But here is another option that I think we are seeing a lot more of right now, and it's a great option. It is called the 3-2-1 buy down. Now, here's the main difference from what I just talked about, is it does not actually buy points for the length of the loan, right? Like I just talked about. These simply purchase 3 or 2 years of lower interest rates. That's it. So what it does is it buys down 1% lower each year. If it's a 3-2-1, it buys it down for 3 years. If it's a 2-1, it buys it down for 2 years. So here's an example. Year 1 on a 3-2-1, year 1, the interest rate would be 3% lower. So if it's 7%, it's 4%. Year 2, the interest is 2% lower. 7% to 5%. The last year, the 3rd year, it is 1% lower. So if it's a 7%, it's now 6%. And now after that 3rd year, it will be the normal interest rate as it is today for the rest of the loan. So this is a great option, honestly, for a lot of people. Now, this option will often cost you around, on a $500,000 home, around 4% of the loan. That would be around $20,000 on a $500,000 loan. Now, here are the monthly savings, though, that are pretty powerful. Year 1, with 3% down, 3% interest rates down, you would save $900 a month. Year 2, with 2% lower, you would save $600 a month. Year 3, you would save $300 a month. And then year 4 and on, you would pay the normal mortgage rate thereafter. Now, what is awesome about this option right now is that we are often getting sellers to contribute or pay for all of that buy down, calling the 3-2-1 buy down. It really allows you to get in the market and be able to utilize the benefits of the 3-2-1 gives. All right, let's talk about the 2-1 option right now. Now, the 2-1 is the same, it's just cheaper up front. So it's actually about half of the cost, okay? So instead of 3 years of lower interest rates, you get 2 years of lower interest rates. So year one, you get 2% lower. Year 2, of course, you get the 1% lower. So these are, again, great options to be able to save you money up front to get you in the game, and 1, bank on lower interest rates coming around the corner, or 2, just allow you to get used to paying a new mortgage. All right, that was a long one, an important one, but let's talk about the second option outside of buy downs, and that is called the 5-1 ARM. Now, this is an adjustable rate mortgage, which is actually a fixed rate for 5 years. So 5-1, right? So a fixed rate for 5 years. Then after 5 years, the rate changes every single year. Now, the advantage to this is you can typically get a lower interest rate currently if you commit to a 5-1. So if you want to get in the game, have a lower mortgage at the moment, do a 5-1 ARM, you know you have a guaranteed interest rate for 5 years, and then after 5 years, the rates are going to adjust every single year. Now, the good thing is that they do always cap them. So let's say the interest rates go to 16%, you won't be paying that because you will hit a cap. So if you think, to be honest with you, if you think refinancing is a good option at some point within the next 5 years, this is a pretty good option to consider. Lower your monthly mortgage payment currently at the moment. All right, let's look at option number 3. This is called seller financing. So let's say you find a home and the price is just a bit too high. It's been on the market for a while. You're not sure if the seller is just trying to get more than they want. Well, look into seeing if the seller owns that outright, meaning they've paid their mortgage off. Because if they do, you may be able to give them the price that they want if they finance the home for you. Now, you might be thinking that sounds interesting. Well, it is, and it's awesome, actually, because the way that you do this, you actually, as the buyer, will often get a better interest rate and have less down payment in this instance. So it's a great option to negotiate terms with. Now, you think, why would a seller do this? Well, one of the advantages to the seller is that they have less closing costs, so they net more. And they don't have to pay as much capital gains tax up front because they're getting their profit over time. And they don't have any more monthly expenses on their end because the deed is transferred. It's now your home. They're just acting as the bank, benefiting from the interest. So honestly, that is an amazing option, and it's a win-win option. Now, if you are having trouble qualifying just for a loan, that's a great option that I just talked about. There's other options called land contract, lease to own options, and these are all really good. We in the 1245 team, we're happy to dive into any of these options when helpful for you. But I just want you to know about them so that you can ask questions and you can know that you may have more opportunities than you just think in regards to financing. The last one is that there is the government. The government gives assistance programs. This is the government. They do offer really good programs. Here's a website I'm going to encourage you to look at. We're going to put these in the description. One is called www.usa.gov/buying/home. You can actually see some really great options there. There's also state and local programs that you can consider and we're going to put those links below for you to see what assistance programs are there to be able to purchase a home. So these are 4 of the many, honestly, that will potentially help you hit your goals. So I always want you to think outside the box. Is there another option that will help you accomplish your goals?